The second thing that was changed was the assurance name was added, which means that our standard number 6, which is already in place, is on external Sharia audit. External Sharia audit is not a financial audit project. It is an assignment. It is a separate assignment that is linked with the assurance services. So even our standard number 6 on audit, external Sharia audit, is to be read in conjunction with ISA 3000, International Standard on Assurance Engagement 3000, and it does not replicate or duplicate the requirements that are already contained in ISA 3000. So these two quick clarifications were needed with regard to the change of name of the series, and obviously this is open for comments for now. If you feel that the new name is better reflective of the mandate and better reflective of the nature of the standards, it will be good. Now, this will keep your space open for keeping like review standards and other type of standards also in the sequence, because they are part of the assurance engagements. So that is the first and the foremost. Second, before going to and before opening this standard, I would like to mention that the strategy for development of auditing standards by AAOIFI Governance Board and AAOIFI Accounting Board, the policy of AAOIFI, the statute of AAOIFI says that auditing standards are developed by the Governance and Ethics Board of AAOIFI with due consultation of AAOIFI Accounting Board, which means that any standard that we develop on the auditing side has to go through the accounting board as well as the governance board being the final authority, but the consultation of accounting board is important. For that consultation process, we follow two approaches. One is that we have created a joint committee of the AAOIFI Accounting Board and AAOIFI Governance and Ethics Board, including some additional experts. We call it Professional Auditing Standards Committee. This is unlike some other working groups. It's a permanent committee which continues for a longer term of the normally coinciding with the term of the respective governance and accounting boards. The committee is primarily responsible for the groundwork that is needed on that part, and it includes members from both accounting and governance board, which means that the relevant input from accounting board is obtained through this committee as well. And then once a standard or exposure targets towards finalization, we take it to the accounting board and request the whole board's comments on that. We share it with them as well as we take it to a meeting and take their comments. Those comments are honored by Governance and Ethics Board in general, and then we finalize the exposure draft and then eventually the standard. Now, this is the approach. What is the strategy? The strategy is, number one, there was a question in front of AAOIFI, shall we continue developing auditing standards? We decided that yes, we will be continuing developing auditing standards because we believe that there is, on one side, we evaluated whether there is a value addition by AAOIFI on the auditing side, and the conclusion was that while the value addition is limited to certain aspects, but still that value addition is significant and paramount, and that's why AAOIFI should continue developing auditing standards. This was part of the auditing standards developing strategy that was discussed, that was presented and approved by the accounting board and governance board, and also it was part of the AAOIFI's overall organization level strategy discussions in 2017, 2018. Which resulted in significant revamping and restructuring of AAOIFI's activities and initiation of new strategic initiatives. The decision was based on the core decision where we have the accounting standards where we feel there is a value addition. While that value addition on the auditing side is much less as compared to the accounting side, but the core principle remains the same. So now, what is the core principle? The principle is that auditing is to provide confidence and here we are all talking about the financial auditing. The Sharia audit is a separate standard, and that's not our subject today. That is standard number 6 already in place. So a lot of people at times confuse this draft of SOAA4 with SOA 6 on the Sharia audit. We need to clarify this. We are talking about the financial audit of an Islamic financial institution or an entity that follows Sharia principles and rules. And this one applies to the financial auditor. Now, what is the value addition part? We believe that accounting standards, I'm just going first to accounting standards part, just to try to explain. So accounting is the language of business which provides useful decision to the relevant stakeholders about an entity. So if you are a creditor, if you are a debtor, if you are a stakeholder, investor, all the stakeholders who are referred to as users of financial statements, they need to have appropriate information, a true and fair view of the financial position, financial or result of financial operations and activities and cash flows of an entity. That for that purpose we prepare the financial statements. Purpose of the auditing is to make sure that there is a second party opinion, an independent opinion available with regard to the adequacy of financial reporting of an institution. So when you prepare financial statements, these are prepared by the management, so a level of confidence need to be enhanced through involvement of audit. This is the summary. I don't want to go in all details about this one. You all are more learned than me. You can well understand that the auditing profession is necessary. Audit process is necessary. Audit opinion is necessary to enhance confidence of the stakeholders on the financial reporting. Now, our financial reporting mandate considers that in Islamic finance, when we talk about the users of the financial statements, there is a concept of having a Sharia conscious user of financial statements. And obviously, that Sharia, so there are two aspects. One aspect is true and fair view, that we need to provide a true and fair view of the financial statement in form of financial statements that reflect the real financial position. And again, for those things, if you are doing Islamic finance transactions, you need to reflect the real characteristics, real risk profile, real transaction flow of the transactions that are Sharia compliant. So that is one part that irrespective of you ignore any other unique type of Sharia conscious users that I was talking about. So on one side, we have among the users, a set of users of financial statement who we call Sharia conscious users. So they need to have information about Sharia compliance, about permissibility of the income that is generated, permissibility of the transactions that are conducted with this entity. And on the other hand, there is a true and fair view issue that whether the real nature, real risk profile, real risk characteristics, real process flow of the transaction is reflected in the financial reporting or not. Considering both these things together, that what is the real true and fair view and what is the qualitative aspect of Sharia compliance reflected in the financial statement, so that you can provide enough information to the Sharia conscious users of the financial statement. These two main considerations are the basis for our accounting standards that we develop. So on one side, we say that information about Sharia compliance is necessary. And on the other side, information about the correct business model and correct transaction structure being reflected is necessary. Now, the same basis comes here on the audited side. We say that while the accounting requires that accounting for Islamic financial institutions and transactions and any other entity that follows Sharia principles and rules requires consideration of the information needs of the Sharia conscious users, which include the Sharia compliance element in the transactions and balances, as well as the real true and fair view in line with the business model and the transaction structure of Sharia compliant transactions. This is required. So you need to require the auditor also to consider these aspects. That is the fundamental point where we develop our standards. So if you go back 25, 27 years back when AAOIFI started developing its auditing standards, maybe the wording I have chosen might be slightly different, but if you go to the objectives of auditing and the standards that have been developed and are still in operation in the countries that adopt AAOIFI's auditing standards, the main consideration remains the same: compliance with Sharia principles and rules to be added to the auditing opinion. So the auditor, we expect, will be providing true and fair view after considering the true nature of Islamic finance transactions and seeing that the financial reporting is done in a manner that it reflects the true nature and it reflects the Sharia compliance. And in addition, the auditor reports on Sharia compliance. So in the countries where AAOIFI's auditing standards are applicable by law or by regulation, you can see that the auditor's opinion even today includes the Sharia compliance part. This brings us to the auditing standards related requirements that are already contained. So in standard number 1, currently, we have the requirement to have an opinion on the Sharia compliance part, in addition to the true and fair view part, which is contained in the same standard paragraph. In SOAA 1, we have tried to, number 1, align the requirements of AAOIFI auditing standards that were developed 25, 27 years back with the current requirements of international standards on auditing, number 1. Number 2, we have tried to align and clarify some of the concepts in more clear wording. That's number 2. Number 3, we have tried to avoid duplication with international standards on auditing. So we have no plan to develop a large, long series of standards. Rather, what we have decided to do is that SOAA 1 new exposure draft is the framework of auditing. It contains the key objectives and the key approaches and the methodology of an audit and the key requirements on the auditor, including the reporting requirements. And then we leave it to the established practices of auditing, which means mainly international standards on auditing, but it may include in different countries the local standards on auditing. So we are not going to develop a whole series of auditing standards. There are probably 2 standards in the pipeline now, SOAA 1, which is the framework. Framework says that established practices of auditing are part of the framework, which means that you need to cover the requirements that are contained in this standard, standard number 1 and standard number 4, and then you have to comply with the requirements of EPA's established practice of auditing, which are primarily international standards on auditing. Now, what is the difference? As I mentioned, the main objective was to make sure that the information needs of the Sharia-conscious users of financial statements are met in the accounting side, and on the auditing side, the confidence that is needed for the users of the financial statement of those entities is enhanced not only on the true and fair view part, but also on the Sharia compliance part. Now, with that, let me summarize very quickly on the framework of auditing part. So framework of auditing part is standard. I'm not going to discuss in detail. Most of you, I can see, have attended the earlier public hearing on SOAA 1 as well. I could see a lot of familiar names, but for sure, some of you might not have read it. So if you have any question about SOAA 1, please feel free to ask during our discussions today. Don't hesitate in that. But with regard to the discussion, we are not going to discuss in detail SOAA 1 today. We are going to discuss only SOAA 4. Now, SOAA 4, what is the purpose of this standard? Let me take a couple of minutes on that. So when we say that SOAA 1 requires, and even current AAOIFI standards require, that the auditor need to report not only on the truth and fairness of the financial statements, but is also supposed to report on the Sharia compliance of the institution or the structure or the entity that is being audited. This is like a fundamental sort of requirement that there should be some additional processes, the additional methodology that is followed by the auditor to ensure that he has enough evidence available to support his opinion. So, for example, if you ask me and say, okay, this is XYZ bank in Bahrain, you need to do an audit of this bank, and obviously Bahrain follows your auditing standards. So the question will be whether and how I can sort of how I can provide an opinion not only on the truth and fairness, but also on the Sharia compliance part. What additional procedures I need to follow? What additional work I need to do? What additional evidence I need to gather? What are other functions that I can rely on? So, for example, that XYZ bank may have a Sharia board, external Sharia audit also required. There would be a internal Sharia audit function, a Sharia compliance or a Sharia supervisor function. So putting all these functions together that are already in place, can I place reliance on that, or I need to start my work from scratch? So one part is how much I can place reliance on that part. One part is what minimum procedures I need to do to assess the controls or to assess the transactions appropriate reporting. Some of the key requirements are contained in SOAA 1, but like old SOAA 4, which is still in process, which provides some guidance on this area, we developed this standard to enhance those requirements and align those requirements with the new SOAA 1 instead of the old one having link with the old SOA 1. So this became like very much important that whatever methodology updates are there in SOAA 1 are to be incorporated here. In addition to that, during evaluation, it was identified that certain aspects of methodology or certain aspects of approach, including reliance part and all that, were not very clear in old SOA 4. So, and even at that time, the governance processes were not there. AAOIFI's governance standards were not there. After having those governance standards in process or those additional processes in most of the markets being available, like having Sharia compliance function, internal Sharia audit function, a lot of markets having external Sharia audit function, Sharia boards functionality being improved over a period of time. More recently, we updated the Sharia boards report format as well. So considering all these aspects, it was necessary to align the requirements with regard to the auditor's responsibility for ensuring compliance with Sharia principles and rules, considering the new governance requirements, considering not only this, I would also like to add that even the main mandate under old auditing standards, which are still in process, is that auditor is required to report on compliance with Sharia rules and principles, not principles and rules. Now we use the term principles and rules, but currently it says Sharia rules and principles as determined by the Sharia board of the institution. So that means that the whole power at that point of time for defining Sharia principles and rules for an institution were in the hand of the Sharia board only. But now it is not the situation. In most of the markets, particularly where AAOIFI standards are adopted, you have a different hierarchy of Sharia principles and rules that is followed. And the Sharia board in a number of markets is not the sole authority to decide it. So this is also one of the mandate-related significant amendment that has been brought in by SOAA 1 and SOAA 4 with regard to this determination of, so what is the criteria on which you will evaluate that whether it's compliant with Sharia principles and rules. So for example, one Sharia board of a bank has a different fatwa from another Sharia board of the bank. What would be the principle here? So maybe the whole hierarchy that AAOIFI has defined starting with AAOIFI Sharia standards, and then country Sharia regulations, and then Central Sharia Board of the country's Sharia rulings, and then financial accounting standards of AAOIFI requirements which are related to Sharia, and then it comes to the requirements of the Sharia requirements of the rules defined by Sharia board. So this is the whole hierarchy. Most of you might have gone through this discussion in the governance standards as well, and this is now contained in the auditing accounting standards as well. So the hierarchy of Sharia principles and rules is to be followed. With this, I would stop here because I have taken enough time in providing a whole sort of background about the key changes, about the approach that we are following, about the strategy that we are following, about some of the key requirements of the SOAA1, because SOAA1 we are not going to review again, but just I have mentioned about some of the few important things. So here I will stop, and I would prefer to take some questions, and if we can have. I can see a couple of one question coming in the Q&A tab. All of you are requested, if you have any questions at this point of time, please put them in the Q&A tab, and then we will take these questions before we move to the presentation. There is anonymous attendee. May I know how AAOIFI actually protects the investor? Is there any simple case study that AAOIFI took part? This is anonymous attendee, and I'm sorry, I don't know whether I should call you brother or sister, but let's try to understand the mandate of AAOIFI. AAOIFI is not a regulator. It's not a financial sector supervisor. So the term that we use, regulatory and supervisory authorities, which include central banks, securities commissions, capital market authorities, insurance supervisory authorities, etc. Even the accounting regulators of different countries, like accounting institutes or institutes of accountants, or the accounting and auditing oversight bodies. They are the ones who enforce the rules. Some of them make the rules also. Some of them enforce the rules. The AAOIFI's mandate is a standard setter. AAOIFI has no mandate and no power, even in the countries where AAOIFI standards are adopted, to ensure or to supervise enforcement of the standards or enforcement of the regulations based on our standards. So, as a summary, I would say that whatever we are trying to do, there are two objectives: upholding the compliance with Sharia principles and rules, and safeguarding the interest of the stakeholders. But we do the standard setting part of it. We don't do, it's not part of our mandate. We don't have any power for that. That applies with regard to its enforcement. So for this purpose, to be honest, AAOIFI has not been part of any type of this activity directly, but whatever we do, as I repeat, is for upholding the Sharia compliance and to safeguard the interest of the stakeholders. I hope the answer is clear, and obviously anything in addition to that is in the hand of the respective regulators, irrespective of whether they adopt AAOIFI standards or not. The authority and the power is with the regulators. Those who follow AAOIFI standards obviously are in a better position because they have a good set of standards being available to them. So eventually they are in a better position to safeguard the interest of the stakeholders. But this is our limitation. Thank you very much for being with us, and I request it is better if all of you keep yourselves identified with your name, and if possible with your institution also. So whenever you put your first question, it was always good if you can mention that you are from which country and which institution. Do we have any other questions? Okay. Okay, my very respected brother Jalil Alali, Assalamu alaikum, and thank you for joining with us. Brother Jalil Brother Jalil is not happy with the approach of the standard. We fundamentally disagree with the standard. There is no need for it. There are already 2 reports issued by 2 different parties on banks' compliance with Sharia. Further, external auditors are not equipped to do this work. This is solution looking for a problem. What is the problem here we are trying to address? Brother Jalil, thank you very much, and we highly respect your vision, your wisdom. No disagreement on that part. And we always learn from you and your colleagues. We learn from your experiences. So that respect is there between us as brothers, and we fully respect that part. Brother Jalil, let me put you to 2 situations. When we were developing this standard, one option was that we completely take out. One option was that we completely take out the Sharia compliance part. But my dear brother, let me take you to the example where under ISAs, we have an ISA on compliance with laws and regulations. Now, this standard covers more or less the same approach that is there in the ISA on compliance with Sharia principles or on compliance with laws and regulations. Now, why? Let me just take that angle, and thanks for your question, because that gives me a reminder that I should have discussed it, like the consideration of laws and regulations by the auditors ISA 250. So let me try to explain the approach of the board. And obviously, your comment is valuable. We are going to take this comment as it is. We would highly appreciate if you can further strengthen your comment by giving some additional arguments. But let's come to that part. So, Brother Jalil, even if we forget that SOAA1, so I think your fundamental difference is with SOAA1 for having the opinion on the Sharia part. Okay, so for example, we have no requirement on SOAA1 with regard to having an additional opinion on the Sharia part. Let me mention, we are not working only for Bahrain, we are developing for a large number of countries. So for example, in a large number of countries, there is a requirement that there should be an opinion on the object clause, that the objectives of the institution according to the objective clause were followed. It's a requirement in a large number of countries. In Islamic financial institutions, the object clause include that they will operate in line with Sharia principles and rules. Right now, I'm not even going to the laws and regulation part. So the point is, if the object clause of an institution, the constitution documents of an institution, the fundamental license of the institution that it has obtained from the regulators includes that it has to operate in line with Sharia principles and rules, then can financial auditor of financial statements, keep his eyes blind about that? Question number 1. Question number 2, that even again, if we forget that there is a requirement in SOAA1, or which is a requirement which is already there in AAOIFI standards, and it is there for 25, 27 years, and you all have been giving opinions based on that there has to be a opinion on compliance with Sharia principles and rules. So even if, my dear brother, if we consider that requirement is not there, as we have ISA 250 on compliance with laws and regulations, what that standard says, and what is the approach of ISAs on that? ISA says that the laws and regulations are something within an entity need to operate. And when it needs to operate, when it needs to operate within the framework of those laws and regulations, then some of the laws and regulations may have a direct financial effect, means that non-compliance with them may result in a financial penalty or a financial impact directly on the transactions and balances. There is a risk that a non-compliance with regulations may result in the organization's entity's ability to operate in the long run. It can be like, a restriction on the business. If you fail to comply with some of the regulations, you may be put on hold with regard to some of your businesses or maybe all of your businesses. So the compliance with laws and regulation standard part, sir, is itself something which is very fundamentally impacting the organization. And this is why they have a holy standard on that. ISAs have a holy standard on that. This standard, if you read, is primarily replacing laws and regulations with Sharia principles and rules in a way that we believe that Sharia principles and rules are also a set of regulations under which an Islamic financial institution has to operate because of, number one, these at times are part of law. These at times are part of the object clause. These are part of the license that you obtain. These at times are subject to restrictions on your business. So putting it all together, I would mention humbly, my dear brother Jalil, that even if I put the requirement of having an opinion on the Sharia side, is still this requirement will be there. To be honest, I can see your second comment that you have put in the chat window, that what is the objective and use of external Sharia compliance report? It's a duplication. This part, okay, Brother Jalil, now it comes to personal as Umar. Yes, I agree. Yes, I agree. Now, the problem is, at this point of time, AAOIFI has not made external Sharia audit mandatory. According to the AAOIFI's standards, external Sharia audit is not mandatory till next 3 years. And once it becomes mandatory, it will become mandatory on the public interest institutions. So if you ask me as Umar, as your brother, if you ask me as Umar, as your brother, your friend, that Umar, what is your view? Is there duplication? I'll agree with you. Absolutely, you are right. There is duplication. But that duplication, as I was mentioning, does not appear in AAOIFI's framework today, which means that AAOIFI has, at this point of time, not made external Sharia audit mandatory. It has kept it optional. After 3 years, as per AAOIFI, again, it depends on the countries who adopt AAOIFI standards, how they implement it. But as per AAOIFI governance standard, external Sharia audit will become applicable mandatory after 3 years. On public interest institutions only, not on the majority of the Islamic financial institutions, where it will still remain an optional part. Financial audit is always necessary. So the minimum coverage in the financial audit part needs to remain there. The third part is very important. At times, there is a conventional institution which has an Islamic window. Now, external Sharia audit might still be needed in those sort of situations where you don't publish an audit report, although AAOIFI standard number 40 requires that you should be attaching window financials to the main financials on an annual basis. But there is no regulatory requirement anywhere in the world to have, probably, oh no, I think Oman has something like that. I'm not clear, but I need to check. But there is generally no requirement of audit of the window financials separately. So if there is no audit of the window financials separately, then windows might still need to be covered through this one. So my Personal opinion. Number one, 100% agreed with you that duplication should not be there. Number two, we would love to have some more comments from your good self and your esteemed organization in writing. It will be great. It will be helpful for us. Surely, obviously, the KPMG is represented in the committee as well as in the accounting board and the governance board, but we need to find better written comments that will be helpful for us. If you ask me, my personal view, again, I'm telling my personal view, and maybe I will request Sister Zahra and Sister Alia to take a note of it based on your comment, that my personal view should be passed on to the board, that where this financial audit opinion includes Sharia compliance, in that situation, you should be not required to have a financial statement or an external Sharia audit. But my dear brother Jalil, there is another challenge that I forgot to mention. So for example, if you see how many countries and regulators adopt AAOIFI governance standards and how many adopt AAOIFI's auditing standards, the number of regulators who adopt AAOIFI's auditing standards, you can count on your fingers. But the number that adopt AAOIFI's governance standards is comparatively bigger. Now, anybody adopting our governance standards do not automatically adopt auditing standards. So if it is about Bahrain, if it is about Oman, if it is about any country that adopts AAOIFI's auditing standards, I would personally be of the view that full-fledged institutions where the auditor's opinion include the Sharia compliance part should be exempted from the external Sharia audit. But external Sharia audit standard will be still needed for number one, windows. Number two, in the countries where AAOIFI's governance standards are adopted, but auditing standards are not adopted. So sorry, Brother Jalil, I might have taken a lot of time in responding to your comment, but to be honest, your comment is very, very valuable for us. Your presence here today is highly appreciated, and your comment will still be taken. I'm just trying to answer based on what was the discussion at the PPSC and what was the discussion at the boards when we developed this one, like this standard as exposure draft. And these were some of the main concerns that were raised by some of the members within the committee and the board as well. So I have just tried to summarize that part. Only this part was my personal opinion, which I will make myself as a recommendation as well, that duplication should not be there. Where there is an audit opinion available, auditing standards are adopted and audit opinion is available, then external Sharia audit should not be mandatory. So maybe we need to put a exemption in the governance framework standard that we developed recently and we issued last year. Maybe we will have to put a clarification to that part, that the requirement even after 3 years when it becomes mandatory, it should not be there. Now, one last thing with CBB. Now, CBB has put external Sharia audit requirement that does not exactly match with the external Sharia audit standard of AAOIFI today. Their reporting format is different. So this is something on which maybe the firms and AAOIFI need to sit together. Maybe we need to do a small roundtable to have some discussion, and then we can make some recommendations to the CBB eventually, inshallah. Again, thank you. Okay. Brother Jalil's comment is that let's make external Sharia compliance audit mandatory and keep it out of the audit report of the FS. Brother Jalil, I have mentioned my personal view. Again, that is my personal view as a professional, but we will take your comment. The only issue is that if we do exclude it from the financial audit opinion, still this standard will be necessary, brother, because of compliance with laws and regulations and other things. So better to keep it in the auditor report, and wherever it is covered in the audit report, then keep the external Sharia audit out of not mandatory or out of requirements. make it not necessary. But still that will be needed in the countries who adopt governance but not auditing standards, and it will still be needed in case of Windows. So thank you very much again. The comment for sure will be taken, and for the additional written comments will be highly appreciated. Anonymous attendee has raised a question: how can this audit be implemented in countries where there is no central or higher Sharia authority? The quick answer is that this standards compliance does not require the higher Sharia authority, because even the hierarchy of Sharia principles and rules says that if there is rulings of the Central Sharia Board, if any, if there are not, then obviously it can still be done. So having a central or higher Sharia supervisory authority is not mandatory here. Another question from anonymous attendee. I don't know whether the same anonymous attendee or somebody else. As I can see, AAOIFI also provide the code of ethics for Islamic finance professionals, which is the AAOIFI have the good effort in this picture to give good behavior starts from the human being itself to achieve adl and ihsan. Is it true that AAOIFI not just externally provide guidelines regarding Sharia compliance, but also some guidance internally for the stakeholders, especially? The guidance is there for sure, but internally for stakeholders means I'm not clear about this part of stakeholders. Internally means AAOIFI's own team. Yes, AAOIFI's own employees, according to their appointment letter, are required to follow this AAOIFI codes. All the board members who are appointed to the AAOIFI boards are required, and they sign on that. The working group members and committee members are also referred to the good ethical practices aligned with this one. So to that extent, we make it mandatory for everybody associated with AAOIFI. We have an additional code of ethics for AAOIFI associated professionals, which is aligned with this one, but it is more specific on some requirements. So anybody working in AAOIFI as employee or working with the AAOIFI's boards, etc., is requested to ensure compliance with these. If this question is not enough and you have any further aspect that I have not answered, please feel free to put the question in more clarification. Assalamu alaikum. My question, again, anonymous attendee. My question, as I asked last meeting, who is going to assess the compliance to Sharia principles of AAOIFI in terms of educational, professional, and Islamic qualifications? I think you are talking about fit and proper criteria. So, fit and proper criteria should be defined by the respective regulators. Our governance standards have mentioned suggested fit and proper criteria for different positions. And we have worked with different regulators around the globe to include AAOIFI's fellowship programs as part of the fit and proper criteria. So this is our effort on this part. I hope this is enough as the answer for you. But if it is not, then please let me know if you have any additional aspect. Soni Mukhtar Kareem. The question is, does AAOIFI require an aspect of faith for accountant to comply with the code of ethics and accounting standard, and how can AAOIFI be adopted as specific audited standard for Sharia auditors? The quick answer is that we don't the matter of faith is part of fit and criteria only, fit and proper criteria only for membership of Sharia board. But then obviously it has to be according to the local customs and the fit and proper criteria defined by the relevant regulators. But for AAOIFI, for Sharia boards, it is mandatory to have faith as Muslim. If somebody asked me personally, it's not even before joining AAOIFI, I was doing a session for it was a session for ILO on microfinance, and they had a session on Islamic microfinance. I did that session for them. And at that time, they asked that everybody in this room, obviously it was an online session, but they said that everybody in the room is not Muslim. So do you think that we can do Islamic microfinance? So my point to them was that in order to do Islamic finance, you don't need to be a believer. You need to be a believer in Islam. Obviously, that is not a fundamental requirement. But I said that you should be a believer in the product. If you don't believe even in the product, I don't think that professionally you will be doing any justice. So the same thing applies, that even if an accountant, an auditor is not having faith in Islam, the person will be professionally doing fine. I personally believe, except for the Sharia board position, etc., the person will still be doing professionally fine, and we respect those professionals who work professionally very well, even if they are not Muslims, if you believe in the product. So that is my fundamental view personally, and I believe that it can work in most situations. Now, the last thing, that how can AOIFI be adopted as specific auditing standard for Sharia auditors? This one is not for Sharia auditors. This one is for financial auditors. But obviously, the regulator has to adopt it. And internally, where the regulators have not adopted, internally, still the institutions with a voluntary adoption, governance processes can always be adopted. Governance and internal auditing processes can always be adopted on a voluntary basis. For that implementation, for sure, AOIFI can provide direct guidance and support and trainings as well. I have a question from my very dear brother Sadaqat, a very senior colleague. Sadaqat sahab, assalamu alaikum and wa alaikum assalam. My response to question raised how AOIFI actually protect the investor or not. In fact, AOIFI Sharia standards are designed, developed to protect the interest of all stakeholders, such as investors, customers, management, and shareholding of AAOIFI, central bank, Sharia regulatory authorities, and we are all responsible before Allah to follow and maintain and ensure Sharia compliance. Sadaqat sahab, absolutely, you are right, but I would like to add that not only the Sharia standards, I would say that the AOIFI's whole bouquet of standards, that is, Sharia standards are the base. They provide the Sharia principles and rules for the main activity, main products and services, and those are designed like that. But when you come to accounting ensures that these are reflected and presented in true and fair view. True and fair view and the transparency and disclosures is something that is needed to protect the interest of the stakeholders, you all will agree. Then we have the governance processes which ensure that stakeholders of the interest, stakeholders' interest is safeguarded. So the governance standards add to this function. Governance standards often also refer to maqasid sharia, which may not be a mandatory Sharia requirement, but that is still additional requirement. Then we have the auditing and Sharia auditing standards, which are also again there to protect the interest of the stakeholders. And then last but not the least, we have all ethics standards. So we want to have ethical practices in Islamic finance in line with the true teachings of Islam, which means that once the ethical practices are followed by individuals and institutions, it means that the parties who are working with them, their interest is safeguarded. So if you ask me, Sadaqat sahab, thank you very much for your kind comment. It's fully agreed. The only point is that I just wanted to add that while Sharia standards are addressing this purpose, but all sets of standards are in this direction. Anonymous attendee, again, I would just like to ask how far actually the investors can rely on international stakeholders like AOIFI, IFSB, and IFM. Now, what do you mean by reliance? This question, because reliance, if you feel that AOIFI can go to court and get some standards implemented, obviously that's not possible. If AOIFI can go to the regulators and push them, obviously we have no authority to push them to get something implemented. It's purely up to their, because each of the regulator represent autonomous country. Autonomous country has its own sovereignty. They have their own laws, regulations. Within those laws and regulations, they have given authority to the regulator and what we call RSA is regulatory and supervisory authority to work on that part. So from that perspective, if you ask that can AOIFI develop right standards to safeguard the interest of the stakeholders, bring anything good to us and make sure that, and you will make sure that it is included in the AOIFI standards in the right way. But when it comes to the other part, that is getting it implemented, getting it enforced, because I believe actually the word actually that you are using is that you want to get, sorry to say, Somebody wants to, I'm fully not disrespecting the comment, but the point is, if anybody is having a grievance against Islamic financial institution or giving grievance against another entity doing Islamic finance, a sukuk issuer or somebody, and you want AOFI to get into that issue and try to resolve that issue, honestly, that is not possible because of AOFI's nature. But for example, you need to understand that even AOFI, IFSB, they work through the regulators. They cannot work without regulators. So the enforcement part, the implementation part, the enforcement part, the issue resolution part, the conflict resolution part, that is all in the hand of the respective RSAs. Thank you very much. I think we have taken enough time in this one, and then I will share the screen, and Brother Jalil's comments are very important. Sister Alia and Sister Zahra, I think we need to be clear about avoiding duplication. His way of avoiding duplication is that it should not be there in the auditing standard. My humble suggestion with regard to avoiding duplication is that we need to give exemption if it is included in the auditor's report. So exemption should apply on the external Sharia audit, not on this one. This is, again, these views will be taken to the board, but the valid concern that is raised by Brother Jalil, and which has already been raised by some other participants in the earlier public hearings as well, is that the duplication should be avoided. It will result in additional cost. It will result in additional burden to Islamic financial institutions without significant value addition. Okay, so with that, I'm going to now share my screen, and we are going to go through the requirements of SOAA 4. I would like to mention that the requirements of SOAA 4 are primarily, at some places, they are divided clearly in two parts. And in some places, they are not divided that much clearly in two parts, but they are actually covering both situations in the same wording. That is, number one, the truth and fairness opinion. So auditor is to give a truth and fairness opinion. So whatever is related to the truth and fairness opinion, that is applicable even if there is no AOFI standard. So if you ask me, okay, before joining AOFI, I was a partner in one of the big four, and I used to audit Islamic financial institutions. And our argument was that laws and regulations applicable to you, object clause applicable to you, requires that you have to remain compliant with Sharia principles and rules, which means that auditor cannot be relieved from the responsibility of assessing compliance with Sharia principles and rules, because these Sharia principles and rules are such laws and regulations that impact the financials and that impact the working capability of the institution, that they may possibly impact the ability of the institution to work in future. So considering it all together, I would like to mention that considering this all together, we will be like, how to put it? Considering it all together, we cannot be relieved from this responsibility, even if we don't write it as an opinion. Again, Brother Jalil, we can have an argument about this, that if you don't write it, then responsibility is less. I believe it's not that much, and to some extent, it is defined in this standard as well. Okay, so we have got through the preface, introduction, background, all these things are discussed. So I'll just brush on this part, because most of these things have been discussed already. Okay, let me just discuss the significant changes here. The contents and requirements have been aligned with the new SOAA 1. Definitions and significant principles have been aligned with the current established practices of auditing, including coverage of certain aspects which were not covered in the predecessor standards, including aspects related to reporting, communication, related parties, compliance with Sharia principles and rules, etc. Auditor's responsibility with regard to consideration for Sharia principles and rules has been addressed in detail, bifurcating between the truth and fairness opinion and the Sharia compliance opinion. This is what I'm saying, that there might be certain aspects that may be unique to the Sharia compliance opinion. But even if we don't go for that Sharia compliance opinion, is still the majority of the standard will be applicable because it impacts the truth and fairness opinion as well. And the same have been aligned with the EPs, that is standard ISA 250 has been considered for that purpose, and it is significantly aligned with ISA 250. The auditor's responsibilities with regard to consideration of design and effective implementation of Sharia principles and rules respectively have been clarified. Additional guidance in respect of substantive procedures as well as reporting, communication and documentation requirements has been provided. Now, the objective of the standard is to prescribe the auditing requirements applicable to the auditor in respect of consideration for Sharia principles and rules and an audit of financial statements of an AAOIFI or other institution that operates in compliance and reports in line with Sharia principle and rules. So the mandate is changed. So AAOIFI plus any waqf that operates in line with Sharia principle and rule, it can be a sukuk entity that sukuk entity or SPV that operates in line with Sharia principles and rules. It can be applicable. Again, the purpose SOAA 1 and this SOAA 4 may be applied by an entity which is a normal business entity, but it claims that it operates in line with Sharia principles and rules. That can also be, again, that's not a mandatory regulatory requirement anywhere today, but the mandate has been enhanced in a way that those can be covered, particularly in some markets where we have that Sharia principles and rule, any Sharia compliant entity that claims to be Sharia compliant has to obtain a certificate. So for that purpose, we have included this one because in those markets where the requirement of certificate for Sharia principles and rules is there. For example, in Pakistan, there is a requirement that any normal company that says that it complies with Sharia principles and rules has to obtain opinion from the Sharia from the securities, not opinion. It has to obtain a Sharia compliance opinion from the Sharia auditor and the external auditor, and it has to obtain a certificate from the Securities Commission. So this is just one example. So when we were developing it, we considered that it is important to keep possibility of coverage of additional entities as well. Anonymous attendee, how to conduct a financial investigation within an entity to ensure that no crimes such as corruption occur. That is subject to a forensic audit and not our scope. So we will be not going in detail. I think a forensic audit should be performed on that. In the process of corporate space investigation, what steps are required? Again, that question is related to the same one. So my quick answer is that it's not part of the discussion today, but a forensic and even forensic audit at this point of time is not a project of AOIFI, even on the Sharia side. So from that perspective, I would simply mention that the forensic audit methodologies should be followed and forensic auditors should be involved. The standard prescribes an auditor's responsibility to consider Sharia principles and rules and audit of financial statement of an AAOIFI or other institution that operates in compliance and reports in line with Sharia principles and rules and carried out in accordance with the AAOIFI auditing framework. The standard complements the requirements of AAOIFI standards on auditing framework of auditing and shall be read in conjunction therewith. Okay, one very important clarification. What AAOIFI plans to do? Now, we will withdraw 5 standards. We will issue these 2 standards after incorporating the public comments and everything. And then there will be, there is a guidance note on AOIFI's report format. So the guidance note on the report format will be issued again after complying with the newer requirements of SOAA 1. There will be probably some guidance available, like ISAs have guidance on the auditing process for some unique aspects, for example, financial derivatives. We believe that some of the Islamic finance structures also need specific guidance to the auditors around the globe. So probably once this first part of the project is done and standards and the guidance note on reporting is done, we will be probably working on developing some guidance material in form of guidance note, in form of practice statement or something that will be coming up to support the learning process of the auditors with regard to what work need to be done with regard to audit of unique Islamic finance products and services. An audit of the financial statement, okay, there are some exclusions. So external Sharia audit is not part of this standard. Assurance engagement with limited scope is not part of this standard. Transaction was structured, which is not in form of a full window, is not in this scope. Institution engaged in general business operations are not in compliance with the identified set of Sharia principles and rule cannot be done. But a general business operation of by an entity can be subject to a Sharia audit under this standard if they identify a clear set of Sharia principles and rules, maybe AAOIFI standards or another set like OIC Islamic Fiqh Academy resolution or any other established set of Sharia principles and rules. Applicable financial reporting framework. So I'm just going, I'll discuss the definitions, some of the important definitions only. Other definitions I'll just quickly skip. Comment from Soni Mukhtar Kareem. If the code of ethics for accountants can be used simultaneously for accountants in Sharia companies and conventional companies, what is your opinion about that? If there need a specific code of ethics for Sharia accountants for adopting AAOIFI? I think it's a good question. So what we are doing, we developed a code of ethics for Islamic finance professionals, which applies on auditors and accountants also. So that is what we did at AAOIFI. But then if you go to this standard or to SOAA, you will see that ESBA code of ethics, which is applicable on accountants and auditors, is also applicable. So what we say that the auditor should be following AAOIFI code plus ISBA code, international code. So together they cover all whole requirements. So then you might not need a third code. Thank you very much. Attestation, there are some definitions which I'm going to skip honestly to save time, and obviously unless anybody has a comment and we can take that comment. Established practices of auditing I already defined comprises the international standards on auditing issued by International Auditing and Assurance Standard Board and or the equivalent standards and regulatory requirements applicable in the respective jurisdiction. Other definitions are coming from our earlier standards mainly, including some of them are coming from SOAA1. There was a question whether we should repeat the definitions that are already covered in SOAA1. We asked this question earlier as well. Sister Zahra, I think some people are of the view that this standard should be self-explanatory and self-contained, means that all the relevant definitions should be included here. And the second approach is that anything that is already there in SOAA1 is not repeated here, and we just create a reference that this should be, because we already said that it should be read in conjunction with SOAA1. So, Sister Zahra, if we can create a poll on that, it would be good as well. Now, we have Sharia compliance opinion and truth and fairness opinion. As per SOA1 earlier, we were calling them primary and supplementary opinion, but probably we will be keeping it as in the new term that was agreed by the board was that we call it truth and fairness opinion and Sharia compliance opinion. So maybe Sister Zahra, I think we can create another poll on that part as well, that what is people's understanding that primary opinion and supplementary opinion is better term, or truth and fairness opinion and Sharia compliance opinion are better term, as we can take comments on that as well in the poll. So you can create two polls now. One about whether we keep the definitions here duplicated, or we keep any definition that is included in SOAA1 not duplicated here, or otherwise the second option is that we and the second poll that we need to do is about the opinion, how we call it. Now, auditor's responsibility. The overall aim for an audit of financial statements, the overall objective of an auditor and the auditor's responsibilities are in the respective SOAA1, that is respective SOA, that is SOAA1. Truth and fairness opinion on the truth and fairness of the financial statements of the institution in all material aspects in line with the applicable financial reporting framework, and Sharia compliance opinion as to whether or not the institution has complied in all material respects with the Sharia principles and rules applicable to its financial arrangements, contracts, and transactions during the period covered by the financial statements. Now, broad classification of the Sharia principles and rules. So this is again very important to understand that major part of it is still applicable even if you don't have a separate opinion. So Sharia principles and rules that affect the auditor's truth and fairness opinion, including Sharia principles and rules relevant to accounting and financial reporting requirements. So for example, timing of recognition of revenue. Now, timing of recognition of revenue is an accounting issue, but it's a Sharia issue also. So what is the real truth and fairness opinion? And particularly, we believe that most of the countries that adopt our auditing standards adopt our accounting standards first. So it means that the timing of recognition of revenue is an accounting issue, but it's a Sharia issue. So this is the first type of Sharia principles and rules that impact the auditor's truth and fairness opinion. Sharia principles and rules whose non-compliance may have financial impacts. So if this refers to paragraph, again, we'll go to paragraph 8 and 9. So now this was A and B. Sharia principles and rules that affect the auditor's truth and fairness opinion, including 1 and 2, Sharia principles and rules related to accounting and financial reporting, Sharia principles and rules whose non-compliance may have financial impact. The second type is Sharia principles and rules, B, that may not affect the auditor's truth and fairness opinion. With regard to the auditor's Sharia compliance opinion, all of the above categories may be relevant. But for the truth and fairness opinion, only two subparts of A are applicable. B part is not applicable on truth and fairness. But for overall Sharia compliance opinion, all the three are applicable. Now, we'll have to understand how they work. So these paragraphs are about that. For the purpose of providing an opinion on truth and fairness of financial statements of an institution, an auditor shall have due consideration of the institution's compliance with Sharia principles and rules that may impact treatment, presentation, and disclosure in the financial statements. There can be certain Sharia principles and rules. Now, 8 is about that impact the financial reporting. So there can be certain Sharia principles and rules that may require specific accounting and financial reporting treatments, presentation, and disclosures in in an institution's financial statement. These may include certain accounting and financial reporting treatments in financial statements, including establishment of contractual right and obligation of counterparties, and hence requiring application of appropriate financial reporting framework and appropriate presentation and disclosures in the financial statement regarding the nature, contractual rights and obligations, and other relevant aspects about certain transactions and balances. So there is let me give you an example. So there is a bank that has a Mudarba investment accounts pool. Now, whether proper accounting was done for that pool and proper profit and loss distribution was calculated and distributed, this is a Sharia issue and this is an accounting issue. So what is the contractual right and obligation of the counterparties? You cannot say that it is a Sharia issue, I cannot perform an audit of that. It is a purely Sharia issue, but it is a purely accounting issue as well. I mentioned about timing of recognition of revenue. Sister Zahra, I think for this one, we had this discussion earlier as well. There are some examples should be included. So maybe some examples might need to be included. I remember there was some comment either verbally by somebody or in the earlier public hearings, but there was a comment that we need to give a list of examples of these things. Some of those are part of, actually some of them are part of the last section of the standard already. Okay, we have a comment here. There is a question from anonymous attendee. May I know why the WAF standards have updated version? I'm not clear. Sharia WAF standard was updated, but that was part of a comprehensive project where we developed WAF accounting, WAF governance, and WAF Sharia standards. So at that time, accounting and governance were new standards and Sharia standard was updated. After that, if there is an update, honestly, it might be some editorial update or some minor corrections. Other than that, there is no revision of these standards. It was done 3, 4 years, 5 years back. I think since then there is no formal update. Even if there is updated version of the website, that may be resulting only on the basis of some minor editorial changes. If you have a specific question about that one, you can just write to us, and we can see what it is there. But to be honest, I think at times we just update something on the website to update on the editorial corrections. That's it. B. So this is about truth and fairness opinion. Appropriate presentation and disclosures in the financial statements regarding the nature, contractual rights and obligations and other relevant aspects about certain transactions and balances. So these are the things that are going to impact. Again, what I remember, it was a discussion that for A and B of 8, there should be examples. Either we give examples in footnote, we add to the body text, or we add in the base of conclusion. But these are to be added. So if Sister Marjan, Sister Zahra, Sister Alia, if you can take a note of this part. Auditor's responsibility with regard to the truth and fairness opinion. Additionally, the financial statement may be affected inter alia by the following situations of non-compliance with Sharia principle and rules. So 8 was about something impacting accounting. It's a Sharia issue, but it impacts accounting. Now, 9 is Sharia issue whose non-compliance may have a financial effect. Not exactly the same. So how it is different. So additionally, the financial statements may be affected inter alia by the following situations of non-compliance with Sharia principles and rules. Financial effect of such non-compliance resulting, for example, in the reversal of transaction, changes in rights and obligations of the counterparty and stakeholders, and payments due to charity or purification of income. So these are the examples. Again, there can be more examples added to that. We can consider if we can add more examples here. But the point is that this is a non-compliance, similar to what we have in the ISA on laws and regulations, consideration of laws and regulations, that there can be some laws and regulations whose non-compliance is not an accounting issue, but it may have a financial impact. So you did something wrong in a transaction, the transaction may be reversed and you need to reverse the profit. Then you did a mistake in a transaction execution, and you may end up paying the income into charity, things like that. In financial effects, for example, can you hear me? Because I'm receiving a message about Sister Zahra, Sister Alia, if you can confirm that my voice was clear, because I received a message about internet connectivity.
It disrupted, brother, for little. Now I can hear you.
Okay.
You can just, you can just,
Okay, I'll continue, but if you feel, then please let me know, because I just received a message that it's in. Okay, so,
yes.
Okay.
Yes,
okay.
brother.
Okay, so in B, non-compliance of contractual arrangement with counterparty resulting in financial effects, for example, in changes in rights and obligation, recognition of revenues and expenses, the computation of profits and losses, and their respective attribution to different stakeholders, and legal and regulatory non-compliance situations and expectation of resulting punitive actions by the regulatory and supervisory authorities, including, for example, restrictions on business activities or financial penalties. So these are the situation similar to what we have on the laws and regulation part. These are the ones that, irrespective of I am giving an opinion on Sharia compliance or not, these are going to impact my truth and fairness opinion. Then we have, that's some more explanation on that part. The requirements in the standard regarding the auditor's responsibility for the truth and fairness opinion are designed to assist the auditor in identifying any material misstatement of the financial statements due to non-compliance with Sharia principles and rules, considering inter alia the factors enumerated in paragraphs 8-9. Accordingly, the auditor is responsible for obtaining reasonable assurance that the financial statements taken as a whole are free from material misstatement, whether due to fraud or error. In conducting an audit of financial statements, the auditor shall consider the effect of applicable Sharia principles and rules, see paragraph 21 to 23, as relevant to respective stages and process flow of an audit engagement. Now, the auditor shall also consider the requirements, including certain detailed procedures and reporting requirements of VPAs regarding the audit considerations for compliance with laws and regulations as considered relevant and suitable in the context of application of the requirements of the standard. So while we are putting some specific requirement, but the general requirements related to laws and regulations still apply. So for example, in Bahrain, AAOIFI Sharia standards are part of law. There is a blatant non-compliance of that. Can auditor keep a blind eye about that? I'm not talking about any interpretation issue or something, a blatant non-compliance. So even if I don't ask the auditor to give a Sharia compliance opinion, even the truth and fairness opinion in the countries where AAOIFI standards are part of law, or Sharia standards in particular are part of law or part of regulation, You cannot simply keep yourself blind about that. So the requirements of EPAs, particularly those related to the laws and regulation, will still apply, because they are some, again, there are some more details in the ISA 250. Auditor's responsibility with regard to Sharia compliance opinion. So what we have done above was about truth and fairness opinion. Now this is the additional opinion part. There is a rebuttable presumption that the auditor, now Brother Jalil, if you read it, you will see that we are not asking you to do something additional. So there is a rebuttable presumption that the auditor's responsibility regarding the work to be performed, enabling it to form its Sharia compliance opinion, concluding as to whether or not the institution has complied with Sharia principles and rules, shall ordinarily not enhance its overall responsibility, and hence the work to be performed regarding its primary responsibility. Sister Marjan, here we have used the term primary responsibility. We need to say that primary responsibility with regard to truth and fairness opinion. I think we need to add this to clarify this part. So what we are saying, Brother Jalil and others, we are saying that in 99% of the situation, ordinarily, what you are required to do on the Sharia, on the truth and fairness part, you don't need to go beyond that. In most of the situation, it will be very rare when you go beyond that. But what is the situation when you might need to go beyond that? The presumption stipulated in paragraph 12 may be rebutted, and an auditor's responsibility regarding Sharia compliance opinion may increase, and hence appropriate additional work may be necessitated if its assessment of risk related to the inability of detection of the institution non-compliance with Sharia principles and rules is increased by virtue of any or a combination of the following factors. A, absence or inadequacy of Sharia governance framework, weak Sharia compliance risk management function, inadequate internal controls relevant to Sharia compliance, and or in auditor's inability to place reliance on or an absence of the work performed by the SSB and the SSB report, the work performed by external Sharia auditor and the external Sharia audit report, the work performed by the internal Sharia audit function and its respective reports. So here we are saying that the auditor generally will not enhance the work, but it will enhance the work if there is failed governance, failed controls, or absence of controls or governance and risk management for Sharia compliance. And that is where you might need to enhance your work. Auditors' respective responsibilities with regard to design and effective implementation of Sharia principles and rules. I'm not going to in detail read word by word. In summary, these requirements in line with the AAOIFI governance standards are clear. The design part of the transactions is the respective Sharia board, in line with the hierarchy of Sharia principles and rules, that is the AAOIFI Sharia standard and the country Sharia regulations and the Central Sharia board rulings. Auditors should generally not be getting into design part. But if there is a if Sharia board approved a product 5 years back and there is a new Sharia standard now, Sharia standard, in case of those countries where AAOIFI standards are adopted as part of law or regulation, what happens that it becomes applicable, which means that auditor today can question it because the hierarchy starts with Sharia standards. So and the Sharia board comes in the end. So if there is a requirement that was earlier approved by Sharia board, but now there is a Sharia standard which is against that, which does not allow that practice, that is where the auditor has responsibility for the design part of the transaction. Otherwise, auditor does not have any say in the design part. And one important clarification here in the definition also and here also, that if there is an interpretation issue, so for example, Sharia standard says that it can be done in case of need. Sharia board says that yes, we can. It is in case of need, it can be done. It is need. We assess that it is a need. Auditors say no, I have a better judgment and I believe it's not a need. It's not necessity. It's not need. No, auditor will not apply judgment or interpretation here. Auditor will go with the judgment and interpretation of the Sharia board. This is to ensure that there is minimum conflict of decision. But if there is a clear, blatant non-compliance, So for example, there is a tangibility requirement as per then standard, which came later. Earlier opinions were maybe based on 33% of tangibility. Even in some countries, they were based on 10 and 20% of tangibility. Now, Sharia standard says 51% of tangibility, and for some limited time, it can go up to 33%. But if it goes below that, tangibility requirement is not met. Or rollover requirement, which was not very clear earlier. Later, it became clear with the then standard. I'm just giving you examples. So auditor cannot keep a blind eye about that. They need to keep an eye on these issues that, okay, now there is a clear requirement of the standard, which is not being complied with the institution. And this is not an interpretation issue. Interpretation issue comes in case of tawarruk standard, for example, where Sharia standard says it can be done in the case of necessity. So maybe I may not like tawarruk myself as auditor, but when I go, I have to go by the judgment of the Sharia board of the institution. Now, all of you have in front of you the poll. So please, there are two questions in the poll. Do you agree that definitions in the standard should be retained in full, or should duplicate definition be avoided that there are already provided in SOA 11? So the option is keep all definitions in SO4 or keep only the definitions as mentioned in SO1. That is option 1. And second question is, what should be the opinions referred to in SOA 1 and 4 be called? Primary and supplementary opinion, or truth and fairness and Sharia compliance opinion. So these are two polls in front of you. You all are requested to answer to these polls. Then auditor's responsibility regarding to effective implementation of Sharia principles and rules is the main responsibility, which means that he can place reliance on the controls and the processes and the governance organs, but he cannot be relieved from the responsibility with regard to the implementation part. So for example, there is a Sharia compliant transaction. There is the design part, that is the agreement, product structure, process flow, and the controls requirement. That is the domain of the Sharia board. Auditor cannot challenge that. But when it comes to the implementation, whether it was executed according to that, this is where the auditor has the primary responsibility. And that responsibility normally would include, in case of, as I mentioned, that Sharia compliance opinion would generally not be included, increasing the requirement. Now, then we have requirements with regard to the limitations of auditors inherent because of inherent limitations of auditors, limitations of responsibility on that part. So that is like, a relieving part for the auditors. And this is again in line with the international standards on auditing and the laws and regulation part. So I'm not going in detail for that one, but we are open for any comments on that one. Then we have the defining the managements and those charged with governance related responsibilities. Then we come to the compliance requirements. So quality management requirements are there in SOAA 1. So you have to follow those requirements. Then planning and risk assessment. So a determination of applicable Sharia principles and rules is important. So in line with the hierarchy, you should have all the fatwa, all the Sharia standards, all the related principles and approved structures and all these things available with you so that you can assess the suitability of Sharia principles and rules that apply. If the Sharia principles and rules are not suitable for any reason, for example, there is an institution that does not have enough fatwa available and does not have Sharia standards adopted by regulation or voluntary. And in that situation, obviously, you may not have enough criteria available to assess the Sharia compliance with. So that may result in withdrawal or disclaimer from the opinion. Interaction with the Sharia supervisor, that is the Sharia supervisory board, etc. The full interaction is needed by the auditor. Obviously, risk assessment part is required. So in different stages, the risk assessment will be factored, and these paragraphs provide the requirements with regard to the risk assessment. Again, these are general guidance to the auditors. I don't want to go in detail. If anybody has a comment or question, please feel free to ask. Then obviously, this is in line with general audit methodology that you will perform the risk assessment, you will assess the controls and all that, and you will assess the update of that control environment, how it mitigates the risk, etc., or reduces the risk to an acceptable level. Determining auditing materiality requirements are in SOAA 1, but some specific requirements are added here in line with the additional considerations. Then again, I'll not go in detail on that part. One very important part is involvement of auditors expert. So the main requirement is there in SOA 1, but here we have put in the clear requirement that there should be subject matter expert for Sharia compliance part and for financial reporting part. So for example, if I'm doing an audit of a bank in Oman, so one side is I need to have a subject matter expert, at least one subject matter expert, maybe on the Sharia compliance part, Sharia principles and rules. So maybe a mufti, a Sharia scholar, a person capable to be a Sharia advisor. And additionally, if my team is not competent enough with regard to the accounting and financial reporting requirements, for example, if my team is in Oman adopts AAOIFI financial accounting standards, but my team is learned in international financial reporting standards, then obviously I need to consider the need of involvement of the experts with the reasonable understanding to be part of the team. Yeah, so because here we are talking about that part of the team to be involving accounting and financial reporting requirements for IFIs. Mainly, we are talking about AAOIFI phases here. Assessing the need for involving expert. Then you will assess whether additional expert need to be involved. This requirement, again, as in case of legal, also you might need to involve your own legal expert here. In case of Sharia, also at time you need to involve your own Sharia experts. Then about reliance on the work performed by SSB, since the design part is in the hand of SSB, so you can place significant reliance on the work of the SSB. So there will be an assessment of that, but not only the report. Here we are saying that you need to review the report, but additionally you need to review the minutes and of the meetings of SSB and the resolutions and fatwas issued, and during the current period, as well as the compendium of fatwas relating to past periods for the transactions that are still continuing. Then we have requirements about if Sharia board report in line with the new format. Here we have referred to the new format. New format is quite detailed. So if report is not available as per new format, then obviously the scope of the Sharia board need to reassess, because the scope of the Sharia board has been enhanced by AAOIFI under the new Sharia governance framework and the new requirements of Sharia, new standard on Sharia supervisory board appointment on the report and review and report. The requirement of the Sharia Supervisory Board review and report standard include the new report and it clarifies the scope of the Sharia board. So we believe that if the Sharia board fulfills that scope that is contained in that governance standard and issues a report, your work requirement is significantly less. But if it does not happen, then what happens, obviously, you might need to request a specific confirmation representation from the Sharia board, and maybe you need to meet or have other communication with the Sharia board. Again, I'm not going on all these details. Then external Sharia auditor. So if external Sharia auditor, if there is an external Sharia audit of the institution also, it can be two forms. One is where there is the same firm is external Sharia auditor. And the second situation is there is another firm of auditors who performs external Sharia audit. If there is another firm that performs external Sharia audit, then in that situation, you should evaluate their independence, their competence, and you should review the report. While if the work is done by your own organization, your own audit firm, in that situation, you should review the working papers also, and you can make use of the work performed and conclusions to reduce your work significantly. So, Brother Jalil, on a lighter note, I have been I have been an auditor myself. So I might think that it might give me just an opportunity to keep both. It just gives me an opportunity to have to work on one and get two opinions and get the fee for two. I'm just talking on the lighter note. Maybe bankers are also listening here, so they will not buy in the idea. But that is a possibility. There is a comment from Brother Mufti Khwaja Nurul Hassan. Assalamu alaikum and welcome, brother. General question. Considering AAOIFI compliance, can any checklist may be proposed and included for the relevant IBI business portfolio which is under offering by the IBI, so that instead of having subjective lines of Sharia compliance, the Sharia auditor's status of AAOIFI compliance may also be visible and explicit. Thank you very much, Brother Mufti Khwaja Nurul Hassan. As I said, that we will be working on the guidance notes, but I think it's a very good thing that can be done by the management itself. So if the management itself creates a clear compliance, compliance summary like this, The Sharia compliance team can do it, internal Sharia audit can do it, and you can just put it in front of the external auditors and it can be done. This is my view till the time there is absence of something from AOIFI. But in long term, for sure, AOIFI is planning to bring in some guidance on that. But obviously, that guidance is going to include some checklists and work programs. I summarize this part also. Then minimum substantive procedures, unless the risk assessment requires additional procedure to be performed, an auditor shall perform minimum substantive procedures with regard to some of the points. Now, what are the minimum substantive procedures? These are some of the things which are similar to what you do as minimum substantive procedures in case of laws and regulations. Obviously, we amended it to suit to Sharia compliance, but these are the similar requirements as minimum audit procedures that you need to do. So inquiry of the management, confirming with the respective governance organs, inspective correspondence with the relevant RSCs, general audit procedures, etc., that need to be done. So these are some simplified procedures. I'm not going to take a lot of time on that part. Then there are additional audit procedures when non-compliance is identified or suspected. So in that situation, obviously, you will have to enhance the work and you have to do the additional work on that part. Some guidance is provided here. This is till paragraph 43, 44. I'm not going in detail here. Additional procedures to identify instances of non-compliance with Sharia principles not having a direct effect on the financial statement. There are some situations where not having a direct effect is still there can be something. So this is the additional part only that is related to the Sharia compliance opinion. Other part of 43, 44, 42, 43, 44, all those paragraphs were applicable irrespective of whether you are giving a Sharia compliance opinion. Sister Zahra, if we can summarize the poll results also. How many people have responded till now?
Okay, brother, let me see it. So 41.
Those who have not responded. Okay, those who have not. Okay, 41 have responded. So it is much less. We have 100 plus participants. So let us. Okay, no, the 41 is not good enough. Just close this one and request quickly to answer others also. So may I request that within next 2 minutes, we have 100 plus participants. So request is that please try to provide an answer to the poll. Sister, the poll is closed. If it is closed, then we can't do anything. But before closing, we should always request. Okay, if you have not closed it, then maybe request the participants because we have nearly 100 plus participants. So the request is if you can provide an answer to the poll. Okay.
Yes, please.
Okay.
Yes, of course.
So then
it's only 59 participants. The percentage is 39% out of the.
Just a request to all of you that in next 2 to 3 minutes, if you can participate in the poll, and then we will see the results. Okay. Now, consideration of fraud and error, professional skepticism. Earlier, there was a fraud and error standard that was there, standard number 5. Now we are going to withdraw that standard. So a couple of requirements are included in the standard number 1, SOAA 1, but some specific requirements with regard to professional skepticism, etc., are included here with regard to the professional skepticism to be applied with regard to Sharia non-compliance. So the risk of fraud and error on the Sharia non-compliance part. So there are some additional guidance provided here. I'm not again going for all these details, but I think one very important section I would like to cover here is that is about some of the very specific requirements that we need to cover. So this guidance that is provided in these paragraphs is quite useful. Again, we can take comments now or in writing later. But I think next couple of months, we want to close this standard and complete the project. So from that perspective, if you have any comments, please try to provide us within a week or maximum within a fortnight. Now, written representations, the general representation requirement is there. So with that, you may need to have additional considerations here. Those are covered here in this one. Now, there is this section I want to touch upon very quickly, that this standard particularly adds certain unique aspects of AAOIFI's audit due to business model and product structure. And again, I would like to emphasize that these are to be considered even if it is a truth and fairness opinion only. So even if I'm a even if I'm a auditor in a country where AAOIFI standards are not followed, auditing standards are not followed as good professional requirements, the requirements of this standard, which are contained in the related to truth and fairness opinion, they all should be followed. So some of these are very important. So an audit of an AAOIFI from the perspective of Sharia compliance consideration may have certain unique aspect due to nature of contractual relationship in line with Sharia principles and rules. In addition, there may be certain specific requirements according to the fiduciary responsibilities and stewardship requirements on the management and those charged with governance as applicable. So what fiduciary responsibility and stewardship requirements are there to safeguard the interest of the stakeholders. So this is as applicable according to the business model of the institution or the respective transaction structure. These fiduciary responsibilities at times may not be segregated from fundamental Sharia compliance requirements. On the other hand, due to their impact on the rights and obligation of the respective parties and transparency consideration, these may have direct impact on the financial reporting requirements of the AAOIFI for the AAOIFI. Sister Marjan, I think the consistency about AAOIFI and institution and where we have used AAOIFI and where we have used institution, I think we might, here I think it was AAOIFI consciously. Here it was AAOIFI consciously, but just remind me to check where we have used the term AAOIFI and where we have used the term institution. Accordingly, an auditor is expected to give due consideration to all such aspects in an audit of AAOIFI, including but not limited to the following: general stewardship and fiduciary responsibilities, whereby it is expected that an AAOIFI as a whole and its management and those charged with governance in particular fulfill the general stewardship requirements and fiduciary responsibilities not only towards the common shareholders, but also towards other particularly participatory stakeholders. Such responsibilities may include related parties to be dealt and also the respective transactions to be reported on a fair and transparent basis, equitable treatment of stakeholders, particularly participatory stakeholders, by having due audit consideration for profit and loss sharing, surplus and deficit determination, reserve management, etc., considering the contractual compliance, computation, valuation, and measurement, and fair and transparent disclosure. Specific funds management and reporting, whereby it is expected that an auditor of an AAOIFI shall give due consideration to such specific funds which are created according to unique business model of the AAOIFI regarding the compliance with Sharia principles and rules and contractual obligations, fulfillment of fiduciary responsibilities, and transparent and fair financial reporting, irrespective of quantitative materiality. These may include the following: charity funds obligations, zakah fund obligations, qard fund, off-balance sheet assets under management, which are kept and reported on an off-balance sheet basis in line with the respective financial reporting framework, and hence may be susceptible to more than ordinary risk of non-fulfillment of Sharia compliance or contractual requirements, risk of unfair and non-transparent reporting, particularly at times in consideration of the overall materiality, and risk of failure to fulfill fiduciary responsibilities. Just to check one thing. Just one thing, Sister Marjan, I think on equitable treatment of stakeholder part, the profit and loss computation part we covered. I think a little bit more expansion with regard to profit and loss calculation might be needed here, because it's not only equitable treatment, but also equitable and fair treatment. I think some expansion in wording might be needed here. Then we have completeness and relevance of information, whereby certain information that may not be considered relevant for a conventional financial institution or any other institution entity may be relevant for fair and transparent reporting in the context of an audit of AAOIFI due to Sharia compliance considerations or the fiduciary responsibility element. Then we have requirements about documentation and archiving and other general organs of governance. Okay, my voice is clear, because again I got a message. I don't know if the internet connection is slow today. Maybe reporting. Then again, reporting of identified and suspected non-compliance to the respective parties, how it will be done, and then how the audit report will be impacted by any non-compliance. The effective date is suggested to be 1/2028, but we will request more comments on that part. Here I will stop my presentation, and first I will request Sister Zahra to put the poll results. Then we can see if we can have any other questions before we conclude.
Yes, brother.
Okay, now we can see the poll results. So no enhancement. Other people
They
who
didn't,
prefer to
yeah.
remain. Yeah, keep all definition in SOAA 4 is the majority view, and then truth and fairness and Sharia compliance opinion is the majority view. Thank you very much, everybody, for that. Now, before I hand it over back to Sister Zahra, if we have any other comment or question, please put it in the Q&A tab. Okay. If we don't receive any comment now, then I'll hand it over back to Sister Zahra for conclusion. And thank you very much, everybody, for patient listening.
Thank you, Brother Umar, for all the discussion. Thank you for the participants for allocating 2 hours of their time for this public hearing. Also, a special thanks for our partners in this public hearing session, which are the Indonesian Institute for Certified Public Accountants, and from Turkey, the Participation Banks Association. In terms of the next step, you still have the chance to provide your comments, whether on governance@aoifi.com, and in the final public hearing, which will be in Arabic, and it will combine the 2 standards on auditing, which are the SOAA1 and the SOAA4. So one is the framework of auditing, and the other one is the standard that was discussed today, the auditing requirement for assessing Sharia compliance or the compliance with Sharia principles and rules. We will post on our social media and on our website the exact date for the Arabic public hearing. And once we hold the public hearing, we will compile all the comments and present them to the relevant committee, which, as I said in the beginning, is the AAASC, the Auditing and Assurance Standards Committee, and the relevant board, which is AAOIFI Governance and Ethics Board. We will issue, inshallah, the final standard within this year. And please stay tuned and check our website for all the updates. Thank you for your time, and fi amanillah.
Thank you. Assalamu alaikum.
مع السلامة.